Hi there, welcome to kneppyinvests. Time to talk about a company I really haven't discussed all that much in this channel, and that is MedAdvisor. They did have a fairly good September quarter Appendix 4C, and they are now operational cash flow positive, and potentially this company has reached an inflection point, a very important inflection point. And not only were they operational cash flow positive, I did notice that on AusBiz's The Core show, this company was recommended as a buy by one analysis. So potentially we are starting to see some traction of this company in or within the fund manager area. And usually when fund managers start getting interested in a company, that can drive the share price higher. So let's get into it and talk about what this company does. MedAdvisor is all about healthcare tech, medication management. They aid in the self-administration of medication using an app. Best way to think about this company, it's like a pharmacy in the palm of your hand. And they are gaining a fair bit of traction not only in this country but also overseas. MedAdvisor was founded in 2012 by Josh Swinnerton and are listed on the ASX in November 2015 as a backdoor listing via Exalt Resources. The current CEO and Managing Director is Robert Reid. He became the Managing Director and CEO just before they listed on the ASX, so he's been in this role for over 6 years. I do like to see CEOs or Managing Directors be in a role for a long period of time, and it does seem like he is doing a fairly good job. Two of the major shareholders include Perennial Value with a 12.3% stake and EBOS with a 7% stake, and the market cap of MedAdvisor is 136 million at 36 cents. Pay attention to that share price because it has been fluctuating quite wildly lately, particularly after the release of the Appendix 4C, so that share price could be a little bit higher right now, and the TIG code is MDR. MedAdvisor has been on my radar for quite a while, and one of the reasons it's been on my radar is just the growth in the revenue. However, in saying that, this company has been bleeding a lot of cash in the past few years. So if we look at the financial year 21 results, compare it to financial year 20, we can see revenue growing from 9.6 million to 38.8 million, but this company again has been highly operational cash flow positive. In financial year 20, $8.7 million negative, and in financial year 21, negative 12.5 million. And in my opinion, that was an issue this company was facing. And they're also highly unprofitable, $9.6 million loss in financial year 20 and $14 million loss in financial year 21. A little bit of cash, net cash of $1 million. And the price to sales ratio at 3.5 is not too much, particularly because the company is growing at a fairly quick rate. Probably should mention that increase in revenue from $9 million to $38 million hasn't been all organic growth because MedAdvisor did do an acquisition in November of last year, and no doubt that acquisition has helped with that increase in revenue. Now let's go back to the September quarter for financial year 21. So this is 1 year ago, just to see how the company was performing then, and then compare it to how it's performed in the most recent September quarter. Receipts to customers at $3.5 million, and MedAdvisor was operational cash flow negative by $1.6 million. And because they were losing cash, that meant the cash in the business fell from $12.3 million to $11 million. So nothing too exciting when we look at the September results from financial year 21, which was the first quarter of that financial year. Now let's have a look at the September quarter for financial year 22 to see if MedAdvisor has improved their business. It does look like things have really taken off for MedAdvisor thanks to that acquisition, and there has been some organic growth as well. Receipts to customers in the most recent September quarter up to $21.2 million, so a significant increase from this quarter from last year. Now, costs have increased as well. You would expect that, but receipts have increased at a greater rate than cost. There's a bit of scale here. I like to see that. That means as receipts or the revenue grow through time, a lot of that growth will go down to the bottom line. And because they have reached a bit of scale, this company is operational cash flow positive by $2.1 million. Now, the most important thing moving forward is whether they can maintain being operational cash flow positive over the next few quarters. This could be a one-off, or it could be a very important inflection point for this company moving forward. And because they are operational cash flow positive and they're not spending too much money in investing and financing activities, most of that cash flow has gone down to the bottom line, and there is an increase in cash in the business from 7.2 million to 8.7 million. One thing I always look at in Appendix 4Cs for companies is Section 7, which shows you the financing facilities of a company or the loans. And MedAdvisor does have some loans totaling 7.3 million. But the borrowings they do have of 7.3 million is less than the cash on hand, 8.7 million. So MedAdvisor is net cash right now. And I do prefer companies to be net cash, not net debt. They could, because of the net cash or the cash on hand, could pay off all their debts, but they have decided at this point in time not to do that. So a lot of things going right for MedAdvisor based off the September quarter Appendix 4C. And I think that's why there are some participants in the market getting a little bit excited about this company right now. And to be honest, I'm getting a little bit excited as well. And I've put this towards the top of my watch list. Another reason I've put MedAdvisor to the top of my watch list is simply because they provided us with a revenue upgrade in the Appendix 4Cs. Now, any sort of upgrade, whether it be revenue or particularly profit upgrades, in my opinion, are the most powerful sort of announcements a company can release. You really have to listen to these announcements because it can be the catalyst for re-rating in the share price of a company. And one of the reasons I really like these sort of announcements, it just means the company is performing better than what management realized whenever they gave out the original guidance. And that's always a good thing. So MedAdvisor have increased their revenue guidance for calendar year 21 from 55 to 57 million up to 59 to 60 million with a gross margin of 55%. If we go back to the quarter after, MedAdvisor backdoored onto the ASX, that would be the December quarter 2015. They received $780,000 in receipts that quarter. And one of the reasons I put MedAdvisor originally onto my watch list is because we did see receipts gradually climb through time. So the receipts increased from $780,000 to $3.5 million of receipts the quarter before they made that acquisition in November of last year. In fact, there was a nice climb from the June quarter 2020 to the September quarter 2020, 2.4 million to 3.5 million. And then you just see the receipts really explode because of that acquisition. So the growth in receipts, there has been some organic growth there, but a lot of that is because of that acquisition. And we have seen receipts grow from 3.5 million to 21.2 million. One of the things I might want to see or just wait for is to see if this momentum in growth of receipts can continue for the December quarter and the March quarter of 2022. And if it can, that could be a good sign that this company has really reached that inflection point. However, there is potential that the market might already realize that now. And if you do wait, you might miss out on significant capital gains. So if I do see a lot more volume come in, I do see the share price remain a little bit higher than it has been in recent times. That could be a sign that the market is convinced that this company will remain operational cash flow positive over the next few quarters and potentially keep on being operational cash flow positive over the next few years. As we turn our attention to the weekly chart for MedAdvisor, going back to when they backdoored onto the ASX from that Exalt Resources company. So the beginning of this chart does include the period where they were Exalt Resources. And we actually can see the share price actually going up from when they listed or backdoored all the way to just after COVID-19 financial panic. Now you can see the large decrease in share price from about 60 cents all the way down to 30 cents during the COVID-19 panic, but then the share price rebounded quite quickly, a V-shaped recovery, and the share price went to a high of 65 cents in May of 2020. But the share price was under significant pressure from that high in May of 2020, and in fact the share price fell from about 65 cents to a low of about 23 cents a few months ago. But it does look like the share price is wanting to turn around. We have started to see a little bit more volume come in, and this quite favorable Appendix 4C looks like it might be driving share price higher and might be a shift in the sentiment from negative to positive. And you'll be able to see that shift or possible shift in sentiment when we look at the daily chart. So let's have a look at the daily chart right now. This is the 1 year daily chart, and from November last year to just recently, the share price of MedAdvisor was in a well-defined downtrend with lower highs and lower lows. And the most recent low was in the middle of September when the share price got down to about 23 cents, which would have been a great time to buy in. You can just see before that low of 23 cents, the share price went from about 35 cents to that low in a couple of weeks. Not a lot of volume, and that tells there's not a lot of sellers that was driving the price down. It's just maybe one or two sellers just needed to get out because they were seeing the share price fall. Share price has recovered, and after release of the Appendix 4C, we did see a little bit more volume come in. You can't see it here because my face is over that. But the share price right now at 38 cents is right on the previous high. So there is a bit of resistance at this level, and you can see it over the past few weeks. The share price has struggled. It's tried to get above 38 cents, but has really struggled. And if we can get above 38 cents, not we, but MedAdvisor, can get above 38 cents and remain above 38 cents, that would be good news, because it does look like there is potential that sentiment is shifting for this company. And if we do get a new uptrend in the share price, that would be a fairly bullish signal in my opinion, because it would coincide with a very good Appendix 4C. And that's one thing I do look for, a new trend in share price coinciding with a good financial report. And it does look like MedAdvisor could have reached that point with the release of this September quarter Appendix 4C. That's all I have for this September quarter Appendix 4C video for MedAdvisor. If you do have any questions about this company, I'd love to hear your thoughts, your questions, even your opinions on this company. I do have this company now at the top of my watch list. A definite potential buy in the next few months, even the next few weeks, potentially even the next few trading days. Last thing I should mention is I'm not a financial advisor. If you do need to seek financial advice, make sure you'll find someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.